Hello, entrepreneurs. Joe DiChara coming to you live from downtown Flushing, New York, once again for another amazing episode of How to Win at Business. I think that's what I'm calling it now. But anyway, happy Monday. It's about 23 degrees below zero here in New York. We've had a snowstorm, and I love these things. It reminds me of being upstate in SUNY Oswego, where people that weighed under 100 pounds sometimes were not allowed to go out because the wind would actually bury them alive in the snow. And that's a true, well, I don't know if it's a true story because I just don't know, but that's what I heard. Anyway, welcome to tonight's broadcast. I'm really excited because tonight I'm going to reveal another stealth tax strategy on how to be in business and not have to worry about all of this compliance. If you're watching live, give me a hashtag live. If you're watching the replay, give me a hashtag replay, because somebody told me that I'm supposed to do that. And it makes me feel pretty good when I see people, because I do go back and check on comments, and I try to follow up with people. If you're new here, if you're here by accident, I am a CPA entrepreneur. I'm an entrepreneuraholic. I'll admit that. I love talking about business, specifically small businesses, micro businesses, people that have never been in business before, that start out at a real disadvantage. And I'm going to cover that in my upcoming 5-day Bedrock Business Building Challenge, which I'm going to be doing here with my team. We're working hard to bring you not only all of the stuff that I've learned and implemented over 35 years in accounting, but the new stuff. Thankfully, I have my VA, Elizabeth Frederick, who gently added these issues that are. And I looked at them. Hi, Elizabeth. Yes, I do listen to you. And they're all relevant. Things like how do you get another PPP loan? Can you get extended unemployment benefits? What else is out there? There's so many things out there now. I lost track of them, to be honest with you. So doing this challenge is like I'm getting to sharpen my blade. So thank you for that, Elizabeth. And I'm really looking forward to that. I'm getting prepared. There's a lot of stuff to cover. I really don't believe how much there is to run a small business. And we're going to try to make it simple for you. Okay. We can't make it easy, but I can definitely make things a lot easier. And I'm going to give you one big stealth tax nugget right now, just to give you an example, that has to do with receipts. People go crazy saving receipts because they don't know what they actually have to save. And I don't think a lot of people even know why they have to save them. So they save stuff that they really don't need. And here's the rule. There's something called the DeMinimis Rule. And it comes under the part in the IRS code that has to do with reimbursing employees for expenses. And over time, with court cases and whatever, this is what the de minimis rule means for small business owners. Anything under $75 does not require a receipt. You don't need to keep your parking ticket or your toll receipt. I don't even think they have toll receipts anymore. But you don't. What you need to do is you need to document it. And the way that we document it is through a simple bookkeeping system. So as I go through my clients' registers and I'm doing my accounting stuff, anything under $75, it's not even really relevant. Okay. Not that it's not relevant. It has to be categorized properly. But the IRS, if there's ever an audit, they are not going to ask you for all of those little, papers. And the funny thing is, a lot of those papers, especially, over time, they disintegrate. The credit card receipts, the ink disappears. I literally, and this is a true story, I went to an IRS audit where they wanted to see all of the receipts. At that time, it was $25. So we're going back a long time. We had all the receipts, but the ink had disappeared. And, we could have made that into a major issue, but that's what the law is today. And when I have been telling people this over the last couple of days, and there's like a sense of relief that comes over people, because all of those shoe boxes, all of those, stupid little pieces of paper that you wrap up in rubber bands that you're never going to need. You're never going to need them. So why waste time saving them? And so that brings me to tonight's topic, because one of the reasons why small business owners are at an immediate disadvantage when we go into business. Okay, when I'm talking about somebody just starting from scratch, because that's the bulk of who I work with now. You're at a great disadvantage, because not only are you targeted by the IRS, not only are you paying higher taxes, not only do you not get respect, but you find very quickly that you're at a time. There is not enough time to do everything. So what we need to do is try to compress time, to try to eliminate those stupid little things that are the black holes in business that you can't account for. You can't, if you want to start clocking your time on how long does it take you to organize all of those stupid little receipts every year, for no other reason than because you think that that's what you got to do. Unfortunately, most accountants don't spend any time teaching their clients about the fundamental things that they need, like books and records. That's what we're talking about. And so I'm getting a little bit off the subject here, but the thing with the 1099s now, I've been talking about this the last couple of days. This is the deadline. And lo and behold, I'm still gathering in information for some of my clients. Susie, we will solve this. I guarantee you, we're going to file by the deadline one way or another, because there's penalties if you don't file. There's penalties. And if you don't file, like I said, if you're required to file and you don't, those are like bad marks. It's like Santa Claus with his bad list. Somebody's over there putting down, they didn't file that thing. And that's the truth. So how do you avoid having to file these stupid 1099 forms every year? It's very simple. It's not easy, just like anything else in business. But you only do business with corporations. Because the funny thing is about the 1099s is corporations, you are not required to give a corporation a 1099. you're required to give an unincorporated entity, a non-employee, as compensation, the NEC, non-employee compensation. You're required to file those. And you could say, like, why? Well, I've said why, because a lot of non-employees or sole proprietors forget that they made money and they don't report it on their tax return. So it's really simple. They want to, and when I say they, I mean the machine. And the machine isn't just the IRS. It's the Social Security Administration, it's the insurance companies, it's the state departments of labor. It could even be Homeland Security, believe it or not. So when I say they, that it's the machine. And they want to track us. They want to track what we're doing. And for a long, long time, corporations have gotten premier treatment. Okay, that's the only way to put it. There's two classes. There's small business and then there's business. Okay, we need to bridge that gap. And that's what S Corps were all about. But that's a whole nother topic. So my secret sauce for tonight, folks, is really become a corporation, become immune to these 1099 NEC things, because they're just like mosquitoes. And, for me, it's another one. I got to swat it away. Okay, it's an administrative hindrance that, again, is put up there by design to make it tougher for small businesses. It's as simple as that. That's my story. I'm sticking to it. Elizabeth, if you're still on, and you have the link to the challenge, I would appreciate it if you could put it up there, because I'm doing 1099s now. That's my story. Over and out. God bless. Thank you. I will see you tomorrow.